Hey everybody, and welcome to Stock Abilities. Today I'm going to be covering the risks and rewards of penny stocks. Now, I've covered some other educational videos, so check them out in the channel and make sure to like and share this video and subscribe to the channel as well. Now, the basics here, I'm reading off of Investopedia here. They're a little bit harsh. They got pump and dump schemes, of course, happen. They got the short and distort. They got the reverse merger, they got mining scams, they got the Guru scam, they got no net sales scams. Now they assume that because penny stocks are such a volatile area that most anybody can afford them, that there's a lot more risk involved, which is true but overall, as long as you're careful and you do your research, there isn't much risk involved at all. Of course, there's certain companies you should avoid altogether, such as like with the offshore scams and all of that, but I'm going to be talking about just really quickly what to look for, what to avoid, and why this article I believe is rather bogus in regards to the risks. It seems more like they're pointing out the risks than the rewards. There isn't really much covered here. It's very basic. But I'll cover that here in a little bit. One of the main things I do is I run it through a bunch of different scanners here, and then I get a list of stocks. Now this already weeds out a lot of the penny stocks that are manipulated, and you also get ones that are like things like short sale restricted, and of course, as they sort of hinted at, you get value stocks as well. Of course, these are over $5, but the point being is you can sort them out, adjust this as you want, and you can filter out a lot of stocks throughout the market. Other things to look into are things like the SEC filings and press releases. Fairly simple. Obviously, if there's good news, you play these more on the market news rather than like a long hold or whatever you do on a standard stock, because the volatility is really strong on that. They do fall under kind of a pump and dump category, but at the same time they do retain a little bit of value. You just have to know where that value sits at before you get into a particular stock. And then other things to look out for are things through like the RSS feeds that you can find, little news things that pop up. There's also membership sites and things like that for biotech and all that. That can give you news a little bit early. Some of the companies to look out for is companies like Dries that simply do reverse splits and pump up stocks on offerings. You don't want to play around with these kind of stocks. Shipping, kind of dangerous area to be in. As you can see, they've been on a pretty long downtrend. They did a reverse split not too long ago. You can check out my other videos for that, but essentially after the reverse split, they popped. Now they didn't pop to 2,336 like it's saying. They popped more to about $100, which is very clearly a pump and dump scheme. So something like that is something you should generally avoid. But at the same time, there is benefits involved in that. As you can see here, you got 188 all the way to 2770. Ethereum had a reverse split as well. So you can expect that after all this holding for quite a while here, as you can see, it was kind of dead for quite a long time here. Now, just ignore these prices because these are reverse split prices, but as you can see, it's kind of settled down since then, and it's been on a decent trend. It has a lot going for it, but the point being is that it popped from this to this. You get in on the fluff news, and then it held and retained some of the value. Obviously, it didn't retain much of the $27 value. It still retained a good bit, though, and it's been kind of steady for roughly the past 3 months. It's been on a little bit of a downturn, and then it kind of got a little bit more steady, and then it's going to probably be popping up again soon. Core value is close to 5, but as you can see, there is risk involved, but at the same time, there's a lot of benefit as well if you're careful in what you're investing in. Other than that, the short answer is do your research. There isn't a whole lot of risk in penny stocks. You just have to use a lot of common sense. You got to use a lot of different filters, as you can see here. I got a whole bunch. Some people do some more simplistic ones, some do more complicated. I try to dabble in each one to get a kind of a good balanced, diversified feel to it. If you're just investing in ETFs or you're just investing in broad range stocks, like well above let's say even 30, 50. I mean, there's very little risk in these, but at the same time, the more you spend, the less earnings you're going to get. Standard ROI, as I covered in another video, which you could check out on the channel, simply indicates it's roughly 7%, 10%, whereas even with just one particular stock with this, no matter where you're going, you can get a lot better of a return than 7%, and that's on even on a monthly basis with just basic value stocks. Even underneath 10, 20 bucks, it doesn't, you'll still get a good return on investment, maybe 5, 10% a month, even more than that. Some penny stocks can offer you potentially 50%, 150%. It sounds unrealistic, but the main goal here is you got to learn the market that you're in. And once you get that down, you're pretty set to go. Of course, you want to avoid a lot of these kind of things, and you want to research into these heavily, and then into the companies as well. Not all of them are going to follow this. There's a good bit of them that do, and that's risk involved in that. You got like even this one is kind of silly. There is some variations of that, but it doesn't happen as often as they say, and then they're kind of offensive in the industry in particular because there's a lot of good mining stocks coming up here in the future. Guru, this one's pretty common, so keep that in mind, something to look for and avoid. A lot of these gurus in the past really got their benefit in their earnings from when the market was on a downtrend for quite a while, and then it finally popped and recovered after kind of a big crash. And then, of course, this is a silly one to be commenting on in penny stocks. A lot of the companies aren't going to have that good of sales. That's the reason that they are penny stocks. This is a very, very silly reasoning. A lot of them won't be very profitable. A lot of the EPSs will be bad. But the goal here is to look for what you see into the future, potential news, potential growth. This is just silly altogether. Go into details about other stuff, but you can check out the article. But short answer is the risk isn't as bad as they make it seem. You just have to be careful. Thanks for listening in. Make sure to subscribe to the channel if you want more videos just like this. I'll be trying to do other educational videos as well. I'm up for any suggestions in the comments below, or you can just message me directly and I'll try to help educate you to the best of my ability. I don't know everything, unfortunately, but I will try to help. Have a nice day.